It's that time again where the big whales and of course the news team up to manipulate you out of your crypto holdings. That's right, you are being manipulated in this dip, and it is a FUD storm and a blood storm with some of the biggest red numbers we've seen on the market in a very long time, as well as some of the most toxic and powerful FUD news that we've seen in quite a while. That's right, we're going to be going through all of the market dynamics that set up this retracement or collapse, if you will, from 65 down to 55. We're going to be talking about everything that went into this, from the FUD such as a ban of cryptocurrencies in Turkey, CNBC running old stories, a ton of over-leveraged longs on exchanges, the Coinbase hype, and the come down, if you will, from that euphoric moment of the first big crypto IPO. We're going to put it all together for you so you can understand how this was one big manipulative moment that is trying to convince the smaller holders, the typically more emotional new players to the market. They're trying to get you to sell. And this is precisely those decisive moments that really change the game for people who are easily manipulated out of their positions, and those who understand that this is a marathon and that dealing with a few battles along the way is part of the journey to actually winning the crypto game. With that said, if you guys are excited for this one, destroy that like button. Remember, each and every comment on this video is entered to win your very own hardware wallet. And with that said, let's dive in. So today, to explain sort of what's going on, we're going to be bringing in a quant crypto trader, Sam Trabucco, and this guy is working with Alameda. Of course, Alameda is owned by Sam Bankman-Fried, who is the founder and CEO of FTX Exchange, and obviously one of the biggest players in futures or using leverage to short and long things. Obviously, the well goes deeper than that, but essentially Sam has some unique insights here about what the market was really set up like and what caused this margin collapse. So first, what we're going to talk about today is over-leveraged markets. So Sam starts off here by saying, for the past week or so, crypto has been on a tear. It's risen slowly but steadily from the mid-50s to the new highs over 65K, seemingly without a ton of fanfare. Amidst the excitement over the coin direct listing, parts of this seemed almost inevitable. Of course, he's referring to the Coinbase listing. The Coinbase listing came and went, and it's hard to say that it was anything but a pretty big disappointment versus the market's hopes, and certainly amidst the market's hype-driven rally. Now, personally, I do think that the Coinbase listing really overperformed, and that it's sitting at the 300-something range gives it a $150 billion valuation. I think that's pretty crazy, but regardless of whether or not that total market cap valuation is crazy, the reality is the chart looks horrible. It's just a massive dump fest, as you can see here. I do think, though, that this thing could turn back onwards and upwards to the upside, but that's a different topic. The point that we're making here is that Coinbase was disappointing for people. But as Sam is saying, he noted that in a thread, crypto started crashing, but it didn't reverse all its gains, that this might be a signal that a lot of the rally was organic or whatever and wasn't going to revert. Maybe, but if you were paying attention, there were clues to the contrary. All throughout this big rally, there were a few weird things going on. Almost all the inflows were happening on futures platforms. So people weren't buying spot, they were leveraging longs, meaning that instead of actually buying the underlying Bitcoin asset, they were actually just betting that Bitcoin would go up. This is more sophisticated trading behavior, betting on an outcome and using leverage. So for example, if I wanted to bet that Bitcoin goes up, I could put leverage on it saying I bet 10x that it's going to go long, meaning that if it goes up 1%, I actually make 10%. And if it goes down 1%, I lose 10%. So if it goes down 10%, I'm wiped out or I'm liquidated. That's how leverage works. Anyway, so back to this thread. In particular on futures platforms with huge leverage, and where that huge leverage has historically led to big liquidations. Sort of like the ones that happened on Thanksgiving 2020. Futures premia have been really high. I'm sure everyone's heard how high the funding has gotten for various perpetual products, and that signals a ton of super aggressive buying going on. Alameda has basically just been selling perps versus buying spot for huge size lately. What he's saying is that everyone's just going long, that nobody's buying the underlying asset, and that what this sets up is a huge amount of leverage in the market, open interest. And that kind of leverage can be cascaded into a violent pump or a violent dump, depending on which direction the leverage is. He also points out that this was extremely true for some of the leading altcoins, like XRP's open interest was extremely high and set up what he showed here as a little bit of a head and shoulders. So he says here in summary that futures have been at unprecedentedly high premia and open interests are skyrocketing. What is this setup? Of course, a massive dump. He's saying, so what does this mean? If things keep going up and up, well, nothing. A bunch of aggro buyers who turned out to be right. But What if there's a reason for a small downturn? A reason like, I don't know, a super hyped listing causing a rally and then falling short of the hype, like Coinbase. He's saying that that could be the reason why people are having a little bit of the air sucked out of the room here. He says he's seen a lot of complex theories for why crypto started crashing, but he doesn't think that you really need them. BTC rallied from 60K to 65K in the days pre-coin and fell to 62K quickly, and then, well, fell to 60K over the next weekend, kind of no biggie and exactly what I'd expect. And so crypto falling a bit makes sense. But what does that mean for all the super aggressive leveraged longs? The same thing it always means. They're getting liquidated. Many billions of dollars did today. So what you have to understand is that leverage kind of works with rocket fuel in the opposite direction that it's being put on the books. So if I'm betting really strongly that the price is going to go down, well, that could trigger something called a short squeeze, where essentially all the shorters get squeezed and liquidated and the price rockets up with a bunch of buying pressure. And in this particular case, we got what's called a long squeeze, which is where all of the longs get liquidated. Everybody betting the price is going to go up gets liquidated, and that creates a bunch of instant selling pressure, which drives the price down. And that's exactly what happened. Anyway, the point that Sam's making is that this was everywhere, it was all over the place, and that the market was way over leveraged. Anyway, the point that Sam's making here, the market was way over leveraged. That's okay. And that what he's saying is the next steps aren't exactly clear, but essentially understanding what just happened is pretty clear in his book. And that next time open interest gets that high and the market starts to go a little sideways and down, he knows what comes next. And maybe you will too. Now, it also didn't help that we got hit with various other FUD storms. Like, for example, the total hash rate of Bitcoin dropping 40% due to a blackout in one province of China. That's right, one province in China represents a significant share of the Bitcoin network. This triggered a ton of memes about essentially Bitcoin being a Chinese coin, Bitcoin not being decentralized. You can see all of the FUD coming in here. And it is worth pointing out that this much hash rate being in one centralized location is not a good thing. It's definitely been one of the biggest criticisms of Bitcoin and crypto is the centralization of mining in China. That's definitely an ongoing complaint. And you can see here that this causes a bunch of FUD. Adding to the FUD storm, we get FX Hedge, who is like a macro investment landscape. Twitter just posts this that says US Treasury to charge several financial institutions for money laundering using cryptocurrencies from sources. Of course, this ominous tweet has led to an incredible amount of FUD, and it really sparked an even bigger level of downward trajectory here. This could have set off some of the circuit breakers that triggered that long squeeze. Regardless, this was a huge amount of FUD that I saw everybody talking about. I got sent this a bunch of times on different social networks, on Twitter, on Telegram, and so this was definitely seeping its way into people's heads here. Now, I did actually get sent this when I was discussing this with Crypto Cobain, who said that this is what he's seeing as the early reports of what exactly this behavior is, which is essentially that the US Treasury is going to sanction 32 Russian entities that were alleged digital currency related election interfering. And so this is, to me, completely unrelated to what it sounds like, which is that they were going to start indicting Bank of America and JP Morgan and Coinbase over money laundering, when in reality, they're actually just going after election interference. Now, of course, I don't actually know where this image is from. This was sent to me by Crypto Cobain. So if it's wrong, you can blame him. But at the same time, this is, to me, again, showing how things are so easy to manipulate, because it's true that US Treasury is going to sanction financial institutions over money laundering or something related to cryptocurrency, but this is really not related to what everybody thinks, which is some major crackdown by the US government on crypto, which is absolutely not what I read through here. This is just having to do with election tampering. So again, showing how the FUD is a huge manipulation factor to small holders. Now, it's worth noting here that during this cascading collapse, if you will, Cobain actually told me, and this is why I was in contact with Kobe, was because he said that several people he knew had negative account balances on exchanges, but still open positions, and he had the nervous face here. Now, of course, this is confusing because normally when your account reaches a zero balance with a leveraged position, say I'm leveraged and I eventually run out of leverage, meaning Say I'm a 10x long and the price goes down 10%, well, I should be wiped out because that 10x on 10% is 100% of my position. And this was the case for a lot of people, that they actually were over leveraged, that the price went so low that they should have been liquidated and had no money left. But instead of being liquidated, FTX actually kept their accounts open and kept their positions open and let them return back to positive balances. And so essentially the idea here is that maybe FTX was internalizing positions to prevent a cascading collapse of liquidations. I'm not going to claim what FTX may or may not have been doing here, but this of course stokes some fears that there might be some insolvency risk on exchanges. And so this again is adding to some FUD. You can see how FUD's coming from every which way all at once, and it really does seem like it's a perfect storm. And that is always when, of course, the best buying opportunities are historically in crypto, but that's for the end of this video. We also have CNBC, right as this is all happening, running a story about India banning cryptocurrencies, which is of course a month-old FUD story, which I don't believe has any reason to be recirculated right now. Again, a suspicious amount of FUD, all coordinated all at the same time. And we also have Turkey banning cryptocurrency payments. This comes in again within the same news cycle, and it's all one big FUD bomb. Now, I haven't even dug into the Turkey story, but I can tell you that it is more than a little bit suspicious. When you see all of these different elements all coming together, the liquidations, the FTX weirdness, the India story, you have the Bitcoin hash rate, you have the actual news here about Turkey, and that's actually not even all. Let's dig in right now to this Coinbase story, which is worth digging into, because this is something that really disappointed people, is when you find out who sold what stock from Coinbase, it starts to paint a pretty interesting picture here. If we dig in here, what we can see is that we see the percent, the delta of ownership here on these cells. We see the party that sold, and we see their delta of ownership. And you can see that Union Square Ventures, one of these VCs, sold 100% of their position for $1.8 billion. Just going to minimize my head here for a second. You see here that the chief financial officer sold 100% of her ownership of Coinbase for $100 million. You see that the chief product officer sold 97% of their position. You see Coinbase's, the founder, Brian Armstrong, selling 71% of his position. You see the chief accounting officer selling 86% of their position. I mean, in the end, this isn't a very welcoming sight to see all of the leadership completely exiting their bags. Now, of course, some people said that it might have just been their first unlock or whatever they had available to sell. I don't actually have data on that, but I'm just saying, like, this is part of the disappointment of the Coinbase listing, is that everybody's kind of cashing it in. Like, is this a top signal? Is this the equivalent of, Charlie Lee selling his Litecoin here, of the Coinbase folks saying, that's it, we know that this is the top? Very, very interesting stuff. And that partly fueled this FUD bomb. So you can see all of this stuff is just all coming together all at the same time. And usually when these things happen in crypto, it does tend to feel like it's trying to shake you out. It feels like a shakeout, but we'll get to that in a second. Now, looking at the Bitcoin chart itself, it really doesn't look that bad. I mean, looking at the daily, we can see that we wicked all the way down here to this next important level of support, which was the 51K range, bounced all the way back up here to this next significant range, which is like the 55K range. And if we can get above it and start working off this support, I mean, hey, there might be a situation where we kind of like do this. I don't know. I love it when the TA guys always draw on it. Maybe we go down here and then reverse up. I don't know. Like, the point is here that this doesn't look that bad, especially when you zoom out and you see that this has bounced nicely off this support. Even with all of this FUD, even with all of this carnage in the news, on the charts and the leverage and the everything, it doesn't even feel that bad. So honestly, looking at Bitcoin, I think that this party is still on, but this is definitely a big wash on the market. And this wash came from many and varied locations. And of course, I do believe that there is a part of this that might be aimed at the Doge crowd, which is of course the new frivolous TikTok crowd that everyone thinks is uneducated. But the reality is that this is a new excited group of crypto investors. And it feels like every time the Doge crowd comes in, there's this huge negative, vicious reaction on the charts. And it happened again just now, right as Doge exploded. Coincidentally, Doge is here at 33 cents, up 12.5% on the day in a sea of red. So I guess this is a testament to the strength of the Doge army, the strength of the DOGE Standard, and you Dogers, stay long, stay strong here. Don't let them shake you out. Don't let them steal your bags, because I do feel like they're targeting the Dogers, and I don't think it's right. I think we need to stand up for our Dogers. They're young, they're new. Most of them, this is their first investment into crypto, and the better this Doge experiment goes for these new investors, the better this Doge experiment goes for these new market participants, the more of a strong and vibrant crypto community we can create. So I think it's important that everybody sees this Doge movement as more than just this social media pump. This is what a mainstream adoption wave looks like, and it looks like a Doge. Now, I wanted to mention right now the whitelist is open for the first project on SuperPaid, which is the collaboration between Superfarm and Paid Network. And this is a project called GlobeDX. Now, I know leverage is kind of the enemy of today's episode, but it's worth noting that leverage is essentially the biggest trading markets in the world. The derivatives market is the biggest financial market in the world, and it will be that way in crypto. So the derivatives sector, as I've talked about many times, is the biggest potential trading sector to actually disrupt here. And any exchange properly addressing the derivatives sector is set to do well. And GlobeDX calls itself the Coinbase for derivatives. I know that's combining the two antagonists of today's episode, Coinbase and derivatives, but look, the reality is that if you have a very successful derivatives platform, you're addressing a total market of like $1 quadrillion. It's insanely big how much a derivatives exchange, how big the numbers can get. It's mind-blowing. GlobeDX has been in development for years, and what makes it super interesting is that it's backed by Y Combinator. Now, Y Combinator is essentially the most successful product incubator, product accelerator in the entire world. Now, Y Combinator has backed some of the most successful apps and websites in the world, including little projects like Airbnb, DoorDash, Stripe, Instacart, Dropbox, Coinbase, Zapier, and the list goes on and on and on. What you need to know about Y Combinator is essentially this is the gold stamp of approval. If you're in the startup space and you're in the tech world and you are starting an app or a website and you're looking for some kind of support, incubation, acceleration, if you get into YC, this is like getting into Yale or Harvard Law. You pretty much have the chance to get funded and backed by the world's most successful and most important VCs and strategic partners. So that's why YC is kind of like this incredible stamp of approval. And GlobeDX here is launching soon, and you can see right here that they're backed by Y Combinator, Pantera Capital, and Tim Draper. And so this is a product looking to be a competitor with the FTXs of the world. We all know FTX does multi-billions in daily volume, and of course, the hope here is that Globe can shoot its shot and become a competitor in that ring. And they do have a significant list of backers here to show that they are very serious about what they're doing. Now, the whitelist for this opened yesterday. It will close tomorrow. So if you want to participate in this, all you need is 1,000 super, and you can enter for your chance to win a whitelist spot here on the first SuperPaid IDO. Now, all of this is going to be hosted on Paid Network's decentralized launch pools. This is the way we're going to do the first one for simplicity, and the tokenomics will be the exact same. The rules will be the exact same for super holders as for paid holders. And we did this for, of course, simplicity. This is really cool that we're having this super event on paid tech, and it's going to be a really interesting way to sample and start this relationship. The next future IDOs will take place on a decentralized toolkit within the Superfarm ecosystem with more projects that are super exciting, just like GlobeDX, that will be announced in the near future. So I know it's a bloody day in the market, but it's important to keep your emotions in check. And of course, if you did want to participate in this Launchpad event, make sure you follow the link in the description here and follow the rules to get on the whitelist for consideration. And yes, for all those asking, this is a KYC situation. You have to be KYC'd in order to get into any of these types of offerings. So there you have it. Leverage, FUD, disappointing launches by Coinbase, the selling of all the stock by Coinbase insiders. It's all a big FUD storm. And the question is it going to shake you out of your positions? I know personally, I bought some of these dips. I looked at a market that was bloody red, and I finally saw, for the first time, it felt like in a while, some serious opportunities opening up. This is exactly what separates the real aggressive traders from those who end up sort of just being market spectators, if you will. It's not that you have to buy the dip. It's just understanding that these types of moments open up new opportunities, and that in reality, most people will be selling at these lows instead of buying. And you always want to counter trade the market for the maximum result. So I do believe that this is a good example of buying the dip. That's sitting at the mid 55,000s for Bitcoin is still extremely healthy and will open up amazing opportunities in the altcoins, and that we are still very much in bull run mode. However, it's important to realize that there was FUD coming from every direction. It almost seemed like a coordinated attack, and typically when these things tend to all line up, it's usually a big negative result for those who get emotional and panic, and it's usually a hugely positive and very important opportunity for those who keep their stuff together, follow the breadcrumbs, try to read between the lines, and make great decisions. I sincerely hope that you're in the latter group. With that said, my name's Elio Trades. I hope you guys enjoyed this. If you got some value out of it, go ahead, destroy that like button. Remember, each and every comment on this video is entered to win your very own hardware wallet. As always, you can find me on Twitter at Elio Trades. I'm always tweeting all kinds of different content, so I'd appreciate if you guys follow me over there. I thank you guys so much for watching, and I'll see you very soon on the next episode.